This is the briefing for Friday, April 5th. Well, yesterday we had the escalation or potential escalation of Mideast conflict, and we also had some Fed governors that were suggesting that potentially the Fed will not lower interest rates, so there'll be no interest rate cuts during this year, and that certainly weighed on the market. We had that pretty good sell-off that I talked about in last night's briefing, and you can see that sell-off right through here. Interesting, I want to point this out once again. This is an upper extreme of this area of rotation. The same thing here, this area of rotation through here. And you can see this pause during the day, and then the breakdown. So typically you get a pretty good move when you see a vertical development move. This happened to be to the downside outside of this area of rotation, but was basically just a rotation back through this range and a false breakout. As we saw in today's trading, the market recovered about half of what it lost in yesterday's trading. So basically what signaled that also was, and I didn't give it much credence in last night's briefing, was the divergence right here in breadth. And you can see that. I talked about it, but I really felt like because the market closed at the low of the day, that breadth would have continued declining had the market continued to be open, and price would have continued to fall, and it would have eliminated that divergence. I discussed that last night, but I should have given more credence to that divergence, because breadth divergences just give us a really good indication of potentially an overbought or an oversold market that is getting ready to rotate in the opposite direction. Now, one thing is important. You can see the huge volume we saw in today's trading. This is the spiders on a 60-minute basis, and you can see the volume that came in based on this selling. If you look at the rotation up we saw today, you can see that volume absolutely collapsed in today's trading, and this move to the upside. Not a good sign for the bullish sentiment of this market. You can see the divergence in the Qs that occurred, or in the NASDAQ that occurred also. And then, of course, we have volume falling off in the Qs as well. So basically, this rally that we saw was not a strong rally, but typical buy the dip rally based on the fact that the market was probably overdone based on the news events that occurred, and that buyers were able to come in and drive price back up. Now, as soon as it traded through this 516 area, that was pretty clear indication that something else was going on, and this was not just a corrective move to this move here. We're closed in the middle of the range, closed in the middle of this range between here and here, and traded through 438, then through 440 in the Qs. And then closing right at the 440 area in the Qs as well. Now, looking at the longer term in terms of the daily charts, once again, this is a series of higher highs and higher lows. It is an uptrend. That uptrend has not been broken, although it came very close in yesterday's trading. 510 was important support. It came down to pretty close to this low. Let's check that low out. Yesterday was 512.76, so it came within about 3 points of trading through that, which would have broken the series of higher highs and higher lows and suggested then the market was transitioning into a greater degree time and price counter trend rotation that would have potentially been a fairly good trade. Now, also, I want to keep in mind here, you can see volume falling off in the spiders in today's trading. But the trend, if you look at the trend in 52-week highs minus 52-week lows, you can see that trend is down. And once again, you can see the divergence that occurred at yesterday's low from the previous day's low in market breadth. So important to what's happening now in the spiders, and spiders are showing a little more strength than the other indices. This is about the 525 area, which is the upside resistance. That's the next level of resistance in the spiders, and support is really right in the middle of today's range, around the 516 area, down to the low of yesterday, which I just discussed. So looking now at where we are with the Qs. Qs showing a little bit weaker. They're basically in the middle of the range, closing right at the 440 area. Next upside resistance is 450, and of course downside support is going to be at 434, which is the low, or pretty close to the low of yesterday. Volume falling off in the Qs as well, and you can see the divergence in market breadth that occurred at yesterday's low. The IWM or the Russell, you can see the rotational pattern that occurred right here. 205 is basically the midpoint of this range, and you can see we traded up to it but backed off slightly. So 205 is resistance in the IWM. Above that is 210, and then below that is 200. So it's going to be interesting to see if we're going to be able to break out of this range. The market has been in a rotational pattern for quite some time. I mean, you can go back here if you include this in this pause or this rotational pattern. We're going all the way back into the beginning of March, where we really have not made a whole lot of progress in terms of pricing in one direction or another. And the other issue is that most of the days have been very low range average price days. And you can see that just in the candles right through here. Yesterday was a pretty significant wide range day. That was surprising not to see some follow through. I was really looking forward, or I was looking for a strategy that was going to take out yesterday's low, test the 510 area, maybe slightly take it out, but on diverging breadth in today's trading, that would have then signaled the potential for some type of rotation back up. But the market decided to climb the ladder of worry right from the open today. And so that validated the divergence that I discussed last night and didn't give a whole lot of credence to. And that will be stored in my memory for the next time that occurs, to pay more attention to the current information the market has given me, which was that divergence in market breadth, that the market was strengthening and not deteriorating. Looking at the overbought and oversold condition, we're basically neutral. So basically the first of next week, we have an opportunity to go in either direction. So the indicator is not giving us any help in terms of whether we can expect a move to the upside or the downside. Looking at total volume, this is total volume on the NYSE. Now this red trend line is a 10-day moving average of price. And I put this up here because I wanted to see basically the general trend in volume. Now, these large spikes, as I've discussed previously, are monthly option expiration days, and they tend to skew volume. As you can see, this line right through here, this moving average right through here, really should have been declining based on what was really happening with price. So right now, you can see the trend. If you eliminate this skew based on option expirations, you can see that the trend in volume is averaging down. And the same thing, even though this was option expiration day in March in the Nasdaq, you can see the trend in volume is down. That is not positive for the trend, the uptrend that we're currently in. So it's going to be interesting to see if volume will begin to increase if we continue to see a move to the upside in the indices. 50 percentage of stocks above the 50-day moving average and the 200-day moving average. This is in the S&P 500. You can see that there's some deterioration here also. Interestingly enough, if you look back here, the percentage of stocks above their 50 and 50-day moving average was at 90%. And look where price was, right down through here. And then, of course, we got this divergence right there, and then this move here that signaled the potential for this type of move. And then, of course, we had this increase moving. But what I want to point out here is the fact that if you look at where price was there with 90% of the stocks trading above their 50-day moving average, and where we are now at 70%, it does not appear there's a strengthening. Now, and the same thing is true with the 200-day moving average. You can see the decline that's occurring in the spiders. Now, or in the S&P 500. I should say that the S&Ps are basically stronger than the Nasdaq or the Russell at this point in time. So they are giving us kind of an indication of some type of move, potentially back to the upside. And this is the NASDAQ percentage of stocks above the 50-day moving average. You can see that it is basically at its low point that it was back in February, the middle of February. This is the percentage of stocks above the 200-day moving average as well. Really not going anywhere. We've got a decline in both of those. And in the Russell, we've got the same thing. Not really an increase of percentage of stocks moving up their 50 and 200-day moving averages. So really no strength coming into the market, at least at this point in time. And if you remember going back to the daily charts, breadth is really just muted. This is NYSE breadth at 525 shares positive. At the close today, only 259 shares positive in the NASDAQ and 171 shares positive in the Russell. So I guess we are potentially open for some more upside beginning the first of the week, potentially climbing a wall of worry. They're really, in this market right now, the internals are not really strong, but I really don't see any selling pressure coming into the market at all. There was selling pressure yesterday, but there was no follow through in today's trading. So it was typical buy the dip mentality that's in the market right now. Now, the problem with that buy the dip mentality is that at some point in time, those guys who are buying the dip get run over. And when they get run over, then the selling really starts pretty heavy. But unless or until that time happens, the trend is up. And we have to respect the trend, even though the strength of that trend, the internal strength of the trend is weak and potentially appears to be weakening as with each passing day. But unless or until we see a break of the series of higher highs and higher lows, then the trend is up, and we have to respect that trend, at least at this point in time. Have a great weekend, and I'll pick this back up for subscribers on Monday.